Welcome. If you've ever wondered how to start investing in stocks but felt overwhelmed, you're in the right place. Today, we'll break down the basics of stock investing step by step using the legendary Warren Buffett strategies as our guide. Whether you're looking to grow your savings, plan for retirement, or simply understand how the stock market works, this beginner's guide will walk you through everything you need to know. Let's dive in and discover how you can start your investment journey with confidence and clarity. You might ask, why should anyone invest in stocks? Stocks represent ownership in companies, and over time, they have historically provided higher returns than most other investments. By investing in stocks, you're putting your money to work, allowing it to grow as companies expand and succeed. This is a key reason why Warren Buffett, one of the world's most successful investors, has built his fortune through stocks. Investing can help you beat inflation, build wealth, and achieve your financial goal. Before we dive into the details, let's get to know Warren Buffett. He's often called the Oracle of Omaha and is famous for his simple, disciplined approach to investing. Buffett's strategies focus on long-term value, patience, and understanding what you're investing in. By following his principles, even beginners can make smart decisions and avoid common pitfalls. Throughout this guide, we'll reference Buffett's methods to help you build a solid foundation for your investing journey. Start with the basics. What exactly is a stock? A stock is a share in the ownership of a company. When you buy a stock, you become a part owner of that business. This means you can benefit from its growth and profit, but you also share in its risks. Stocks are traded on exchanges, and their prices can go up or down depending on how the company performs and how investors feel about its future. Understanding this is the first step to becoming a confident investor. Stock market is where buyers and sellers come together to trade shares of companies. Think of it as a giant marketplace, but instead of fruits and vegetables, people are buying and selling pieces of businesses. Prices are determined by supply and demand. If more people want to buy a stock, its price goes up. If more want to sell, the price goes down. Understanding this dynamic helps you make sense of why stock prices change every day. Before you start investing, it's important to know what you're aiming for. Are you saving for retirement, a home, or your child's education? Setting clear goals will help you choose the right investments and stay motivated. Warren Buffett always emphasizes having a plan and sticking to it. Take some time to think about your financial objectives and how much risk you're comfortable taking. This will shape your entire investment approach. Investing always involves risk, but it also offers the potential for reward. Stocks can go up or down in value, sometimes quickly. The key is to understand your own risk tolerance, how much fluctuation you can handle without losing sleep. Buffett advises only investing in what you understand and being comfortable with the ups and downs. By balancing risk and reward, you can make decisions that suit your personal situation and long-term goals. Not all stocks are the same. There are two main types: common stocks and preferred stocks. Common stocks give you voting rights and a share of the company's profits, while preferred stocks usually pay fixed dividends but don't offer voting rights. Most investors, including Buffett, focus on common stocks because they offer the greatest potential for growth over time. Knowing the difference helps you make informed choices as you build your portfolio. Buy and sell stocks. You'll need a brokerage account. This is like a bank account, but for investments. Opening one is straightforward. Choose a reputable broker, fill out an application, and fund your account. Many brokers offer online platforms with user-friendly tools. Make sure to compare fees, features, and customer service before making your choice. Once your account is set up, you're ready to start investing. Once your brokerage account is open, the next step is to fund it. This usually involves transferring money from your bank account. Decide how much you want to start with. Remember, you don't need a fortune to begin. Even small amounts can grow over time. Buffett himself started with modest sums and built his wealth gradually. The key is to get started and be consistent with your contributions. Warren Buffett's #1 rule is simple: don't lose money. While it's impossible to avoid all losses, this rule reminds us to be cautious and thoughtful with our investments. Avoid risky bets and focus on preserving your capital. Buffett suggests investing in companies with strong fundamentals and a history of steady performance. By being careful, you can protect your investments and build wealth over time. One of the most powerful concepts in investing is compound interest. This means your money earns returns, and then those returns earn even more returns. Over time, compounding can turn small investments into significant wealth. Buffett credits much of his success to the magic of compounding. The earlier you start, the more time your money has to grow. That's why it's important to begin investing as soon as possible. Buffett often talks about staying within your circle of competence. This means investing in businesses you understand. If you know how a company makes money and what drives its success, you're more likely to make smart decisions. Don't feel pressured to invest in trendy stocks or industries you don't grasp. Focus on what you know and you'll have a better chance of success. Research is key to successful investing. Start by looking at a company's financial statements, business model, and industry position. Check its earnings, debt, and growth prospects. Buffett spends hours reading annual reports and understanding the companies he invests in. You don't need to be an expert, but taking the time to learn about a company before buying its stock can help you avoid costly mistakes. Financial statements are like a company's report card. They show how much money the business makes, what it owns, and what it owes. Learning to read balance sheets, income statements, and cash flow statements is essential. Buffett uses these documents to judge whether a company is healthy and worth investing in. Don't worry, you can start with the basics and build your knowledge over time. Warren Buffett is known for value investing. This means looking for companies that are undervalued by the market but have strong fundamentals. He buys stocks when they are priced below their true worth and holds them for the long term. Value investing requires patience and discipline, but it can lead to great rewards. By focusing on value, you can avoid overpaying and increase your chances of success. Intrinsic value is the true worth of a company based on its assets, earnings, and growth potential. Buffett calculates intrinsic value to decide if a stock is a good deal. If the market price is lower than the intrinsic value, it's a potential buy. Learning how to estimate intrinsic value helps you make smarter investment choices and avoid overpaying for stocks. Margin of safety is a key concept in Buffett's strategy. It means buying stocks at a price well below their intrinsic value, giving you a cushion if things don't go as planned. This principle helps protect your investments from unexpected risks. Always look for a margin of safety before making a purchase. It's a simple way to reduce risk and improve your chances of success. Diversification means spreading your investments across different companies and industries. This reduces the impact if one stock performs poorly. Buffett believes in owning a handful of great businesses rather than dozens of mediocre ones, but for beginners, diversification is a smart way to manage risk. Don't put all your eggs in one basket, build a balanced portfolio for stability and growth. Ready to buy your first stock? Placing a trade is simple with most online brokers. Search for the company's ticker symbol, enter the number of shares, and choose your order type, market, or limit. Double-check your details before confirming. Remember, it's okay to start small. The important thing is to take action and learn as you go. After you've bought your first stock, it's important to keep an eye on your investments. Check in regularly, but don't obsess over daily price changes. Buffett recommends focusing on the long-term performance of the business, not short-term market swings. Review your portfolio every few months and make adjustments if needed. Staying informed helps you make better decisions. Stocks pay dividends, regular payments to shareholders. Reinvesting these dividends can accelerate your wealth building by buying more shares automatically. Buffett often reinvests dividends to take advantage of compounding. Over time, this strategy can significantly boost your returns. Check if your broker offers a dividend reinvestment plan, DRIP, and consider enrolling. Investing can be emotional, especially when markets are volatile. It's easy to panic and sell when prices drop or get greedy when they rise. Buffett is famous for staying calm and rational even during market turmoil. Stick to your plan, avoid knee-jerk reactions, and remember that investing is a long-term game. Patience and discipline are your best friends. Everyone makes mistakes, even Warren Buffett. The key is to learn from them and improve your strategy. Review your investment decisions, identify what went wrong, and adjust your approach. Mistakes are part of the learning process. By reflecting on your experiences, you'll become a smarter, more confident investor over time. The stock market is always changing, so it's important to stay informed. Read financial news, follow company updates, and keep learning about investing. Buffett spends much of his day reading and staying up to date. The more you know, the better equipped you'll be to make smart decisions. Make learning a lifelong habit. One of Buffett's greatest strengths is his patience. He often holds investments for years, allowing them to grow and compound. Don't expect overnight success. Building wealth through stocks takes time. By staying patient and sticking to your plan, you can achieve impressive results just like Buffett has over his long career. It's tempting to chase hot stock tips or follow the crowd, but Buffett warns against this. Instead, do your own research and make decisions based on facts, not rumors. Hot tips often lead to disappointment and losses. Trust your analysis and stick to your strategy for the best results. Consistent investing, even in small amounts, can lead to big results over time. Buffett recommends making regular contributions to your investment account, regardless of market conditions. This approach, known as dollar cost averaging, helps smooth out market ups and downs and builds wealth steadily. Make investing a habit, not a one-time event. It's important to review your portfolio periodically. Check if your investments still match your goals and risk tolerance. Rebalance if necessary by selling some assets and buying others. Buffett reviews his holdings regularly to ensure they still meet his criteria. This helps you stay on track and make adjustments as your life and goals change. Investing in stocks can have tax implications. Profits from selling stocks may be subject to capital gains tax, while dividends may also be taxed. Buffett is known for his tax-efficient strategies, such as holding investments for the long term. Consult a tax advisor to understand how taxes affect your investments and plan accordingly. Buffett often recommends index funds for beginners. These funds track the performance of a broad market index like the S&P 500 and offer instant diversification. They're low-cost, easy to manage, and have historically delivered strong returns. If picking individual stocks feels overwhelming, index funds are a great way to get started. High fees can eat into your investment returns over time. Buffett advises choosing low-cost investment options like index funds or brokers with minimal commissions. Always check the fees before investing and understand how they affect your overall returns. Keeping costs low is an easy way to boost your long-term gains. Markets will go up and down, but Buffett's advice is to stay the course. Don't let short-term volatility shake your confidence. Stick to your plan, keep investing regularly, and focus on your long-term goals. Over time, this steady approach can help you weather market storms and come out ahead. Every year, Warren Buffett writes a letter to shareholders of his company, Berkshire Hathaway. These letters are full of wisdom and practical advice for investors. Reading them can help you understand his mindset and approach to investing. They're available for free online and are a valuable resource for anyone looking to improve their investment skills. Buffett strongly advises against borrowing money to invest in stocks. Using debt can magnify your losses and put your financial future at risk. Always invest with money you can afford to lose and avoid margin trading unless you fully understand the risks. Staying debt-free helps you invest with confidence and peace of mind. Patience is a recurring theme in Buffett's philosophy. He often says that the stock market is a device for transferring money from the impatient to the patient. By waiting for the right opportunities and holding your investments through ups and downs, you can achieve better results. Remember, investing is a marathon, not a sprint. Successful investing is about building good habits. Set aside money regularly, keep learning, and review your progress. Buffett attributes much of his success to discipline and consistency. By developing positive habits, you'll set yourself up for long-term financial success and avoid common pitfalls. Selling stocks can be as important as buying them. Buffett sells when the fundamentals of a company change or when he finds a better opportunity. Avoid selling out of fear or short-term market movements. Make decisions based on your goals and the company's long-term prospects. Emotions can cloud your judgment and lead to poor investment decisions. Buffett is known for his calm, rational approach. Practice mindfulness and stay focused on your plan even when markets are turbulent. By keeping your emotions in check, you'll make better choices and avoid costly mistakes. The world of investing is always evolving. Make a habit of continuous learning, read books, attend seminars, and follow reputable financial news. Buffett is a lifelong learner, always seeking new knowledge. The more you learn, the more confident and successful you'll become as an investor. There are no shortcuts to wealth in the stock market. Buffett warns against get-rich-quick schemes and promises of easy money. Focus on building wealth slowly and steadily through smart, disciplined investing. Trust the process and avoid anything that sounds too good to be true. Let's recap Buffett's top investing tips. Invest in what you understand, focus on value, be patient, avoid debt, keep costs low, and always keep learning. These principles have helped Buffett achieve incredible success and can guide you on your own investing journey. Remember, simple strategies often work best. Now that you have a solid foundation, it's time to take action. Start small, stay consistent, and keep learning as you go. Remember, every great investor started as a beginner. With Buffett's strategies and your commitment, you're well on your way to building wealth through stocks. There are plenty of resources to help you continue learning. Books, online courses, and reputable financial websites can deepen your understanding. Buffett recommends reading widely and learning from others' experiences. Take advantage of these tools to build your confidence and skills as an investor. Congratulations, you've completed this beginner's guide to stock investing inspired by Warren Buffett's proven strategies. Remember, investing is a journey, not a destination. Stay curious, keep learning, and enjoy the process. With patience, discipline, and the right mindset, you can achieve your financial goals and build a brighter future.